The Federal Reserve has cut interest rates by 25 basis points, but experts are increasingly concerned that the economy is in bubble territory, with the stock market, housing, and Bitcoin reaching all-time highs. Despite this, the Fed's actions have been focused on controlling inflation, which has slightly decreased from last year's 3.3% to 2.7%. However, prices for essential items like food and health insurance remain high. The Fed is aiming to keep inflation steady and avoid spikes, with the hope of bringing it back to their 2% target. The stock market has had an exceptional year, with the S&P 500 up more than 30%. However, experts warn this may not last, as stocks are at historically high valuations, with the Buffett indicator showing the market is overvalued at 208%. Some economists predict a 26% drop in 2025, although others believe the market could continue climbing. Despite concerns about stock valuations, a diversified approach and steady investing is still recommended. Bitcoin, which hit $100,000, is also becoming more prominent, with companies like Microsoft and Amazon considering adding it to their reserves. In 2025, Bitcoin could become even more integrated, as political support for it grows. However, the housing market presents a different story. Even though mortgage rates are at their highest in 20 years, home prices have risen 5.9% year over year, and buyer demand is expected to increase in 2025, which could push prices even higher. The Fed has warned that rate cuts in 2025 will be slower than originally expected. They want to ensure inflation remains under control before making any more significant moves. So, while markets are high and uncertain, the key takeaway is to prepare for the worst by diversifying your investments and maintaining a long-term, consistent strategy.